Carl back?
Yes, he
Is he still here? Did it snow? Okay, boss.
Okay, so this is our makeup session, and thankfully it didn't snow on us, so we are going to be able to finish on time, and that's great. Tonight is Where's the Money panel, and these gentlemen have been gracious enough to lend their time for this discussion. So if you have banking questions, we have Wayne Anderson with People Incorporated, which you had a lot of questions with Natasha last night about some of the People Incorporated programs, and Wayne can probably answer those questions more completely than Natasha did last night. We have Burt Whisman and he's with Highlands Union Bank. We have Mike Ratliff from First Community Bank. We have Gene Copenhaver from First Bank and Trust. So I think we've got all of our banks covered, and I think we've got an excellent panel. And so please, when you get a chance, thank them for coming, because as you know, we all have to get off work and then come do this, and a lot of times in the winter you'd rather go home and have dinner with your family. So I do appreciate their participation in this portion of the business challenge, and make sure that you ask questions that will help you with your business plan and help you with your business model. So with that, I will open the floor.
How about we start out with each one of you giving a little plug or intro about yourself, what you do at the bank, how long you've been there, and if there's any specialty, this is your opportunity to plug your institution. So, Wayne, do you want to start?
Yeah, can we lie to make ourselves look better? I'm Wayne Anderson. I've been with People Incorporated for a couple of years. My background is in banking, actually, so I understand what these guys are doing each day. I've had about 25 to 26 years in banking prior to my coming on with People Incorporated. I'm an area resident, born and raised in Bristol, Tennessee, actually, but I've worked most of my career in Abingdon for First American, True Point, Commonwealth Community, First Union, those places. So you do have some good representation here with these bankers, and I'm hoping that we can give you all of the ammunition that you need to get your business started. And I'm glad that you're doing this. At People Incorporated, we recognize that entrepreneurs think so much differently than people who are willing just to do a 40-hour-a-week thing. And so I'm glad to be here just so I can learn from you all as well. So I've got some business cards. I didn't realize we were going to have such a large congregation. But anyway, you'll find me at People Inc., and I'm glad to help.
I'm Burt Whisman. I'm with Highlands Union Bank here in Abingdon. I've been with the company about 6 months. Prior to that, I did a short stint here with Wayne at People Incorporated, and then worked for Regions Financial Corporation, which if any of you are from the Bristol, Tennessee market or know that area, it's a large regional bank in that neck of the woods. And I've spent about 10 years with them. Spent most of my life in the consumer banking side, branch managing and doing some things for the district, along with some small business lending.
My name is Mike Ratliff. I'm with First Community Bank. I'm the city executive for our Abingdon division, which is our Abingdon, Gate City, and Clintwood branches. I'm also a commercial small business lender for the bank. I have a unique background. I've been in banking for about 8 years, but I started in banking many years ago in Grundy with Miners and Merchants Bank. And at that time, I was sitting down with small businesses, and I didn't have any experience. I was fresh out of college, so I left banking after about a year and managed enterprise rental-car offices, all basically Roanoke to Marion for 7 years. And then got an opportunity to come back into banking, and been working with businesses ever since. Well, First Community Bank, we're new to this area. We bought Bank of America in Abingdon and Bank of America in Gate City. We've had Clintwood's already a branch we've had. We have a couple branches in Johnson City and about 50 others throughout the state, Virginia, North Carolina, West Virginia. Our specialty is working capital lending for businesses, that are making a product or making something that they need money to buy inventory, raw materials, things of that nature, along with commercial real estate, which is kind of a foundation of all community banks. And but that's what we specialize in. That's, we're glad to be here in Abingdon. We've been here for about a year now, and we're a 140-year-old bank. Pretty impressive. Thank you for having me this evening to talk with you.
I'm Gene Copenhaver. I'm with First Bank and Trust. I've been with the bank about 12 years. Before that, I was with the Farm Credit System for 7 years. And before that, I was with the government lending with USDA for about 13 years. So sort of diversified background in lending. Our niche, my niche, is agricultural lending. We have an agriculture division within the bank, which is about 30% of the bank. It's really unique to the East Coast to have that much lending. In agriculture, I also do commercial loans. In my past, I did a lot of rural house, rural mortgage, and ag loans. But First Bank and Trust is headquartered here in Abingdon. We're a community bank, consider ourselves a community bank. We have branches in East Tennessee, in Virginia, and where a footprint for the ag division is the 7 mid-Atlantic states. So it's we have a niche that not many banks around here have, but we do believe in entrepreneurship. When we hire a person, we look at that background of them, because we want people that think that way, think outside the box when they do lending for us. So glad to be here. Hope to answer some questions. If I can't, these 3 guys know a lot more than I do, so they'll answer for you.
Okay, floor's open. Now it's time to ask. Who wants to start? Come on. You have free money?
I'll be glad to tell you about the different aspects of lending that we do. First and foremost, I would encourage you, well, first let me just say a little bit about People Incorporated. You've probably heard of us for many years. We've been in business for 50 years. We are a nonprofit community action agency. We get our money from U.S. Treasury, from Small Business Administration, from Tobacco Commission. We also administer community development block grants that are issued from the state to localities across the state of Commonwealth of Virginia. And so we administer funds in about 41 or 42 counties and cities across the state. We cover pretty much every corner of the state with the exception of the Richmond, Hampton, that area that's on the east coast. But we go all the way up to Loudoun County, which is south of the airport. So we cover basically all of the state. Why would you want to come to People Incorporated? I will tell you first and foremost that you're already working on your business plans, is that correct? Okay. Which I know, how many hate them? Well, you're normal.
Sorry about that.
They're just a part of it. The good thing about it is you do your business plan and then you start your business and you may never look at it again. Okay? But it is the document that helps people like us understand what your background is, understand how that background will help you in the success of your business. Because our board has a policy. It's not just what we do for you, it's what we do to you. And so we don't want to obligate you to a business and a debt that's going to set you up for failure, because it does take a while to recover from a business that goes bad. So you all are getting the foundation that you really, really, really need, and you're going about it the right way by doing it this way. We do require, I want to brag on something. We had an application that it just grieved me to see it because it was 8 pages long. And I would hand it to people and I'd say, just fill out this just fill out this 8-page application, So we decided that we were going to revise that, so we did. And here it is. there's the application. With it, of course, we do need your business plan, because we're gonna take all the information from your business plan about your projections and what you think it's gonna cost you, what you're gonna make, what the trends are in the business that you're going into. And we're gonna ask that you kind of validate that information by going before one of the Small Business Development Center representatives. They're here in this I don't know if they're in this building, no, they're in the other building. But Tom and Sue are great. You know, they're there for you. You don't have to write them a check for their services. That's what they're here for. And they will help you validate all of that information that's needed for your business plan, so that you know going into it that there's some substance to that, you know. Because really, in reality, with the exception of maybe a few, there's a lot of hypothetical things associated with the business plan. And for those of you who are already into business, we know, you know, the economy has its effect on things. What happens with the business that goes in next door to you has an impact. There's just so many things that can impact it. Personal life situations at home can impact that. So it's just good to have that validation from the small business development centers in the area that you are going to operate. So with that, why would you come to People Incorporated? We are able to take higher risk for people who have maybe need for some Band-Aids or something in the prime lending world, which is these guys right here. And the reason that we want you to try to get your financing through them is apparent. They're banks, and they're going to be able to supply you with money probably at a lesser rate than what we can do, probably for a longer term than what we can do. But with that comes credentials that are sometimes hard to measure up to. So it's when you go to the bank and they say, you know, this is a square peg and all we've got is round holes and it's just not fitting. That's where we come into play. And we come into play with, you know, the working capital need, or you need to stock your inventory, and the bank just doesn't want to bite off the whole thing. So how much can People Incorporated do? That's where we come in. Our rates range from 3.5% to 6.5%. Okay, if it's tourism related, we can hook you up with the 9th District loan for 3.5%. If it's anything but that, then it's 6.5%. Terms range from 6 years up to 10 years, and we can be more creative than that. The thing about it is, these guys will appreciate this. We are not regulated. Does that make any sense to you? So we just kind of make the rules as we go along. And we have a CEO, Rob Goldsmith. He's been doing this for 40 years. And he used a term that I had never really related to in my banking career when we were talking about collateral. He said, collateral is leverage. It leverages the client to want to make payments to us, okay? So if your in-laws are pledging their house, you don't really care if you make the payment, depending on your relationship with your in-laws. But if it's an heirloom that you put up that a bank would never look at, we'll consider that. You know, if it's got tangible value, it can be seized, it can be liquidated to pay off a debt in bad situations, we'll take a look at that. So we're able to take risk that the banks are just not allowed to take because of the regulations that they operate under. And then I want to share one more thing with you, and I'm going to turn it over to these other guys, and they really are a lot smarter than me. I want to tell you about, I want to brag about this. Let's see, what's the savings account rate right now?
Yeah.
What we're talking about.
Okay, People Incorporated has a savings account that pays 66.6%. There's a limit to how much you can earn on it. But I have the information here, and Natasha may have already hit on this, so I won't bore you with the details. But anyway, you do have to meet income requirements, or if you're currently receiving the TANF or free or reduced lunch, or earned income tax credit on your previous year's taxes, you qualify. But there's also parameters of income here. But what we do is, for every dollar you put in, we put in $2. And so you can you can put in $2,000, and at the end of the investment, you have $6,000. You can use that towards education, towards purchasing a house, or towards furthering your business. So it's a really good incentive. It's very easy. Gail Lambert is our representative who takes care of that, and it's something that I would encourage all of you to consider There again, the criteria for qualifying for it is kind of strict as far as the income levels, but if you fit that parameter, we would be more than happy to talk to you about that. As far as what we do, I have brochures, and everybody's like brochures, I got brochures coming out in my ears, but anyway, I've got some up here, and I've also got these new annual reports. In it, you'll see stories of some of the entrepreneurs that we have put into business, and it gives their stories. I thought I would open it right up to my favorite one here, but that didn't happen. So, but anyway, this is the lady in Roanoke, Virginia, Black Diamond School of Beauty. And this is a good story about someone who just is taking their passion and making a business of it. And she's also sharing her passion with those that she's teaching cosmetology to, and making them, giving them an avenue to make a living for themselves. So you're welcome. I don't have enough for everybody, but you're welcome to take any of the stuff that you have up here. The less I go home with, the more effective they think I was. So,
Wayne, is there a deadline on that savings account, like application, or what's going on with that?
is
Is there like a deadline to apply for that, or
No, it's ongoing.
just ongoing no matter
I
what?
have the applications here. So, I think it's, yeah. So
What is that called?
it's the VITA program, and it's basically, once you qualify, Gail will set you up with that. And I'm not sure, I think there is a time limit. I think you have to have it, you have to pay into it for a certain amount of time. In other words, you can't bring us a check for $2,000 and they'll write you one for $6. It's one of those things you need to invest a little bit of time in, but it's a very good thing. And like I said, I have it up here. I'm going to put them out here on this table. You can also find all of our information, all of our applications and everything on our website, peopleincorporated.net or peopleinc.net. You'll find my contact information. I have some business cards here. So I just welcome any questions that you got.
What's the minimum amount that you have to start the savings account?
You can do $25. And I will say this, the reason that we want to partner with the banks, we don't want to find ourselves in competition with them because we are a nonprofit organization. Keep in mind that these guys here, not only can they do your loan for you, they can set up your commercial banking, your online banking, your merchant accounts, all that stuff that you're going to need to operate your business, whereas it kind of stops with us with the technical assistance and training that we can provide for you at no charge. Any technical assistance training that you get from People Incorporated is free of charge. But short of that, and then getting the loan, you know, the rest of it's kind of, you got to go out there, you're going to have to go to a bank anyway. So if you're not bank ready right now, our goal is to get you there so that when you pay our loan off, you have now gone through the credit counseling or whatever it is to mend the credit problems that you have, and then go back to the bank and say, hey, Bert, look what I've done over the last 2 years. Okay? So that's kind of how we work. Yes, ma'am.
So that's for people that qualify though, so what's the annual income limit on that?
On the savings program, for for one person, the maximum household income allowed annually is $22,980. For 2 people, the maximum allowed income is $31,020. For 3 people in the household, it's $39,060. For 4 people in the household, it's $47,100. And for 5 people in the household, it's $55,140. And that does have to be earned income. It has to be part-time or full-time employment. It can't be from a subsidy source, like Social Security.
Now, what was 2 again?
2 is $31,020. Well, that's everybody in the household.
So if you're married, you have to count both of your salaries,
Yep.
no matter if they're doing the business or not.
Correct.
What is your definition, when you said, the right background, or, I can't remember what you said, what are you looking for with the background? If you're starting a business, is it prior business experience, or just?
Well, and that's kind of a pretty broad thing that I said, but basically what we want to know is if you're going to go into if you're going to go into the tanning business and all you've ever done is worked at, in retail, and you've had no schooling, or, you know, we want to see that there's some correlation with your past experience. Maybe it's a family-owned business, something that drives you towards, causing you to think you're going to succeed in that business. Because we don't want to set you up in a business that you don't have the right attributes for. Yeah, yeah. What other questions have you got for me? Did I tell you rates? Okay.
So could we come just to you and, you know, if we have no idea what we're doing? Like, I mean, we have, like, we know what we wanna do, but we're not sure how to get there. Can we, like, meet with you and you give us some help to?
Absolutely. My office is right across from the old Allison's restaurant, which is now a vacant building. If anybody wants to start a restaurant. Room 505, you'll find me. So, I would be more than happy to, and I will direct, you know, what we do is, if you come to me and I see that you're bank worthy, I'm gonna tell you that. I mean, our rate is 6.5%, and for a small loan of $25,000 or $30,000, that's really not too bad. But you don't wanna pay 6.5% to purchase a commercial building. Not in this environment right now. Maybe one of these days that'll sound real good, but right now not so.
And what are your hours?
8 to 4:30, or anytime you need me.
I think I can speak for the panel. If you come to us, we're gonna find the right fit for you too.
Yeah.
Right, if it's People Inc., or if it's if it's an SBA loan, or is it's a rural development loan, or whatever. I think most community bankers, and we're all community bankers here, are going to find that fit for you in the banking system, in the loan system. So we're going to try to direct you just the same way you would. And we might be directed back to Wayne, but that's.
And we can also determine, you know, what technical assistance we can provide for you, as far as training, customer service training. We've actually gone to, Front Royal, Virginia, I think, and done customer service training for a second restaurant that opened up by an entrepreneur that started one several years earlier in Woodstock. So we went up and did customer service training for 30 of their employees, no charge to them. So there's all kinds of benefits, and, you know, we are nobody without our partners at the banks. We don't intend to encroach on what they're supposed to do. So if you come to me and you've got a 785 Beacon score, and you have very little debt, and you've got $50,000 worth of cash to put into this thing, I'm gonna tell you, you know, it's gonna be worth your while to go speak to a banker, because that's gonna interest them. And then what they can't do, we'll be glad to pick up the phone.
And Wayne kind of hit that. It's actually been better for us to talk than you ended up, because a lot of times we're directing people towards you. So what you're going to get when you come into a bank is, you know, we're going to ask me the same questions. We're going to fill out an application, and as Wayne said, they're not regulated, so a lot of the things with cash flow and collateral, they may be able to get around that we may not at the bank. You know, we're going to want to look and see if you have cash flow coming from your business that will support the loan that you need, or coming from, if you're, you know, maybe doing a part-time job and starting a business, you know, how that's gonna, you know, cover your cash flow to pay that debt to support you and your family during that time. And from a collateral piece, sometimes you may be leasing a building, you may not need equipment, you may be providing a service, and you may not have that to help secure a loan. You know, sometimes Wayne has something that you can get going to get started, and then, as he said, you know, 2-3 years as a bank, we'd like to see at least 2 years of a track record of experience if you're in that situation where you didn't really have the collateral or the cash flow to start. So we have something to base our decision off of going forward.
You were talking about a time frame of 2 or 3 years. It used to be, I don't know how long ago, but around 5 years is a time where a business will succeed or not. Is that still about the same time frame? And what things are you know, business wise, I mean, as far as the money goes,
Sure.
that would, you know, say, you know, before you get to the point where you have to close, that make a better decision if you do it earlier, where you're still saving things you still have that would not be connected to that business? I probably asked 2 or 3 questions.
No, it's okay. No, I mean, I think your first question there, I would say the trend is, you know, that probably 4 to 5 year mark that business just kind of stays out there. And is there anything specific that lends to that? I think it's all the stuff you're doing now that, you know, your business plan, knowing where that source of revenue is coming from and knowing what that use of cash is going to. I think knowing all those things about your business are the keys to it being successful. Knowing what in a market downturn or something happening with the economy, how do you continue? You know, thinking of those things in the beginning, having a plan for them so they don't catch you unexpected. Now, given there's things that can happen that none of us can plan for, but as a bank, and we want to see that, you know, you plan for those things, you've thought about those things ahead of time, and yeah, so we use the kind of the 2 to 3 year mark that we can track, you know, historical cash flow. You're showing a trend that hopefully is going up from either customers or revenues or some format in there that is increasing, and we can build our desire to do a loan for you off of that.
Mike, you mentioned about business plans, and of course, all of their business plans are due next week on the 26th. When you're reviewing a business plan, all 4 of you, what are some of the key components that you all are looking for when you're reviewing a plan? All of you.
The one thing is make sure you have a market there for whatever you're doing. I don't care if you're selling widgets, you know, do you have a place after you make the widget to sell it? Do you have some type of, I think that's number one, that you have that market before you even think about your pro forma or anything else. Is that market there to do that? That's number one for me.
I would second that closely. For us is what we consider time in industry. It's kind of like what we were talking about earlier, is if, you know, you've worked all your life in one of us guys banking, and then we came in here and said we wanted to open up a machine shop. You know, that would be something that we look at pretty quickly, especially if it's a newer business, let's say that 3 year and under mark, just to see if it's something that you have experience in. You may know there's a market for a machine shop. You may be able to come up with some good pro formas, but if you're like me and you don't know the first thing about metalwork or welding, you know, where are you going to be in 60 days? So that's one thing we look at.
I would say competition. I mean, who's your competition? What sets you apart from the competition? I mean, if you're opening a business that there's already 3 or 4 in town or in the area, what makes you feel like you're going to survive as good or better than those businesses? That's a big thing that we'll want to look at.
And I think you got to look at a long range plan, not the short term. You know, are you going to expand 3 years down the road? Where's your resources going to come for that expansion? And are you going to, and the people management part of that? I see more people that get along well as a small business and they decide to expand, and they don't have the people skills to manage people to expand. And that's where I see them fail more than sometimes than initially.
Something that's important to us is we like to see that you have the wherewithal or whatever to support yourself absent of the income that this business may or may not generate. We'd like to see that you got a little nest egg that can help kind of soften the harsh edges of opening a new business. But they're all different. Failure rate for some retail businesses is so much higher than others. And so that I don't defeat anybody, I won't throw out what those are. But when you go before these SBDCs, Sue Wagner, Tom Fleckenstein, Margie Douglas, Tim Blankenbecker, Jim Pratt, wherever they are, they will help you understand the competition, the trends, all that stuff that will just give you a much broader perspective of how delicate your business may be, or how, you know, it may just hit the ground and take off like you never expected. So those are just good. You know, some things never change. Doesn't matter I don't think it matters to you women how much money you don't have coming in. You're gonna get your hair done, and you're gonna get your nails done, and that type of thing. So that industry, depending on the entrepreneur, can be easy to make successful. But when you get into the bigger competitions, and you're competing with the Bass Pros and the, you know, if Mahoney's down in Johnson City, Mahoney's has been there for a long, long time, and they have sustained their client base because they were there long before Bass Pro or Cabela's or, you know, the Walmarts ever came into the market. However, in retrospect, if they were trying to open that business now, it might be a different picture. So, you know, there's so many things. One thing that I would encourage about a business plan, it's kind of like a resume. Actually, when you take a resume into somebody, to be honest with you, they probably look at it for about 5 minutes. Now, we're not going to do that with your business plan, but concise is good. Concise and informative is good. Don't find yourself elaborating on and on and on, because it's so easy for us guys just to kind of get lost in that. So just keep it concise. Don't leave anything out, of course, but just keep it concise. And as far as your projections, I got one the other day that had 4 years of projections with 4 different types of scenarios. And by the time I was done with it, I had no idea what I was looking at. So just keep it, you know, keep it clean and concise, and don't be afraid to ask for help from the SBDCs, but you'll be so glad that you did. And I'm not going to say anything else.
No. If I start my hoverboard manufacturing plant from the U.S., do you suggest I use all my savings, or would you prefer me to keep a little bit of savings as a backup for those tough months? Oh, I'm serious. I get asked that question because some people want to put 100% of their savings in there, and then when there's a month that sales are slow and they've got to make these payments, they don't have any kind of secondary income source.
We're a
So,
big believer in backup liquidity, to have that, you know, working capital backup liquidity, because you're gonna need it. Everybody needs it. Even us bankers need it, so.
I think it goes back to what Wayne said, you know, earlier. We want to see that you have some money aside, whether it's another job or it's a nest egg or whatever, to support yourself. You know, provided this business doesn't work, or provided that you just need to support yourself. It's not going to provide enough income in the beginning to, you know, support everything that you need. So we're absolutely going to look at what you have and advise you on, you know, what you should keep back, what you should put into the business. Now, we don't always have the exact answer to that, but I think it's a combination of what we can advise you on and what you feel comfortable with.
If you've done that already, somewhat, if there's money here and coming in, and the savings part did go, we bought a business that was over 30 years old. So the newer business came in about 8 years ago, took a lot of that. So it struggled, owner to owner, back and forth, but still staying alive. However, went to people incorporated, went through all the motions, and getting ready to open a brand new one instead, and had a whole different plan, and I felt like I went overboard on my business plan just because of what you said.
Well, I wasn't using you as an example.
Well, I know. I didn't have to use it, you know, because we ended up buying this instead, so
Oh, good.
it changed totally around, but this needs a overhaul completely for the competition. And, so the savings part of it was just bought straight out that way. But there is a rental property and money coming in, it's just that I wish that hadn't happened that way. I wish we had to deliver.
Okay, yeah.
So, do you think, seeing that was paid for,
Yeah, equity, and especially in real estate, speaks volumes, and it speaks volumes to us, and it speaks volumes to these guys too. And the only thing that would interfere, collateral is never the trump for everything. We use the term, bankers are famous for terms. We use the word mitigate a lot. If this is we, what's going on with this that totally overrides the risk associated with money to one farm. You know, if you're pledging your home and everything that you own, chances are, you're not gonna really walk away from that business. There's a possibility that that can happen. So that's when we have to pull ourselves back and say, it's not what we do for them, it's what we do to them. We don't wanna take anything away from them. You know, Rob Goldsmith's got a pair of deer antlers, or a set of deer antlers in his credenza that were actually pledged as collateral. Now, that's not all of his pledged as collateral, but, it was a keepsake, and so he pulled that out one day and he said this was leverage at one time. Didn't work out real well, but, you know, we don't wanna take anything. No creditor ever, despite what you may hear, has joy in saying, oh, they're gonna pledge that, let's hope they never make it back. Ain't gonna happen. So,
Lucky that nothing was put up, you know, it was inheritance money actually, and that just clear, but which is.
and we look at that, if it's verifiable, we look at that as skin in the game. And
That's what I was thinking.
that helps promote and mitigate some of the risk associated with the application.
It just seems like, I mean, it's hard, and we've all been at the wrong time of the year too, slow season was hard to get through, now it's coming up, but it's getting all that competition.
So has your loan balance paid down pretty?
There's no loan there, it's all. it's
Oh,
just-
okay, so that's what you're
straight
saying,
out.
okay.
Yeah, so but I wish there had been a loan, you know, even though it still was rough, it would have been rough to even make a payment, but I still wish that nest egg was
Well, it's not
sitting
too
there.
late to,
Even though,
you know, our loan funds can be used. You know, one thing we can't do is we can't do debt consolidations through our program, but we do have a consumer lending department that can do that.
it just needs pretty bad money, just, I think it could be there. I want to borrow my business money, but I don't have to use it now. But,
Yeah.
yeah, that's a lot of it.
Okay, good.
So you talked about maybe doing a cash out, whereas one of our loan officers calls it equity redemption.
Well, here's the thing, it's a partnership, but, my part was, my time. And I read up on it, that, you know, you put your time in, somebody puts their money in, you still gotta equal that out. And, which I don't think equals out, so, you know, but, you know, it should equal out in the end anyway, that way, but still I wish that other half of that money was really sitting there to rebate all of that. Because I think we could really take it over everybody.
Would that be a good segue into the goodwill section of what we consider? I mean, you know, like if you're buying a McDonald's franchise,
Yeah,
just the fact that you're gonna have golden arches in front of your restaurant
Yeah.
speaks volumes. You don't have to market that.
right.
You know, you don't have to put anything in the paper that says, when you're up on Lee Highway next time, look at the golden arches. You know, people know what they are, and
It's just mostly loyalty, apparently, just keep it going, and it has grown in the last 2 years because of the other people that had it redone now.
definitely something to take a look at.
But now that that's all done, and we can still come back and pull about our real estate.
I got a question for you, Mike. If a customer comes to your bank and has talked to one of your loan officers and, you know, wants to borrow a significant sum of money, I guess like, the rate would be 4.5 or 5, you know, work with me. I don't know. I haven't pursued it entirely. Then you start talking about fixed rate, 10 years and all that. If someone presents a plan, is there any way, I know because you have regulations, banks are there to make money, that's fair, you know.
Sure.
Can you go lower than that number that's presently now?
You're hoping from a rate standpoint?
Yes.
Yeah, I mean, so rate kind of is a product of risk, term, and cash flow. Yeah, I mean, it's a combination of everything. So I mean, yeah, so I mean, at our bank, at First Community Bank, we don't necessarily have a rate sheet that we go off of. We have a pricing model. It is ultimately what it is, and we put all those different things in that pricing model, and this is a range of rates that we could offer you based on this scenario. And so yeah, so I mean, there's no steadfast way that has to be. It has to be 4.5%. It has to be 5.5%. Did that answer your question?
Yeah, that answered it. It's really what's, like you said, what skin you bring to the game there,
Sure.
and I think I can present it.
One thing is, probably important as bankers and as business owners or new business owners is, if you have our loan product, then most of the time we want your deposits also. And with that deposits, if you keep deposits in there, and we're gonna consider that when we make our rate decision for that, because we like to loan your own money back to you, to tell you the truth.
Sometimes that goes on, actually, credit decision as well.
Yeah,
In
it
terms
does.
of, if there's weaknesses in one area of the credit request, but if maybe you've been a customer of a particular institution for many years on the consumer side, or in other ventures or whatnot, I mean, that can go into what Wayne was saying, the mitigating factors that we can also look at.
Do each of your banks, you offer credit card processing options? 'Cause, for those starting up, have you even looked into that? So that's an option too, whoever you're going to be doing banking with, you might want to look at that and compare rates.
And just for a plug for all of them, a lot of small businesses and some of the places that I frequent, the lady that cuts my kid's hair, for example, she uses the ever-prominent Square. Everybody's seen Square advertised. If you get into the fine print of that, depending on the dollar of the transaction, depending on how many transactions, they have the right to hold your money, I think up to like 30 days. So, they don't advertise that. And that's kind of way down in the contract for them. And you may not ever know it until you have a large sale or something that's out of your normal realm. Or maybe it's you're selling something to somebody out of town. They get into those whole range of how they do it. I think I speak pretty freely for most of us on the panel. If you go to your bank, whether it's Highlands Union, whether it's First Bank, whatnot, you're set up with their merchant services. And, you're using them as your primary bank. Most of the time you get overnight funding. Are you guys doing next day funding? So, and then if there is a problem, that gives you someone to go talk to. It's not get online and chat with somebody, which
Shop local.
it's, you can go down and you can yell at Mike. You can come down and you can yell at me. You can say, hey, why is this pending? And sometimes we can correct the situation.
That's exactly right, and I'll tell you, he is not telling you anything to make you use your bank, your local banks. Square is much more expensive. There's not anybody to talk to, and if you have a problem or you don't see your deposit, it could take 30, 60, 90 days to fix it because you're trying to do it over the internet. And so, if you establish a relationship with your bank, whichever bank that is, when you need something, I can pick up the phone and call my bank and say, hey, so-and-so, I've got a problem. I need for you to do this. And I can tell you, even when I went to work at the incubator, there was an outstanding interest charge that somebody didn't realize was there. And a bill came in for $1,500, and it was interest and principal on the interest. It was interest on the late fees. And, I called the bank and I went, I'm not sure how this happened, but we got to have some help here. And they did. You will never get $1,500 refunded back from Square. I can tell you that.
Can I speak up? I actually agree with both of you all because I was the person that called on the phone to complain about that stuff. But honestly, I worked at a local bank here, and that was our major selling point, but it was the truth. When you had a problem with your credit card machine or with your bill, whatever, you could call us and we would work it out for you because we could look at your banking statement. We could look at your credit card statement. Whereas if you've got two separate, you're gonna have to call the credit card person, call your bank. They can't talk without you on the phone, blah, blah, blah. So, what you're both saying is, I can vouch
Well,
for.
if you have a business that you go to markets or, you know, and you're not in a physical location, I understand, but again, you don't have to only use Square. Everybody's got a computer at home. So you can have two opportunities here. You can use your hometown bank for the majority of your business, and when you're out of your office, use Square, you know.
You
Those
still don't
banks
have
have the
to
same
there
one.
because there are also
They all have
options
this
at your
one.
local bank
Yeah.
that you can use. They have mobile options
Yeah.
that work just as good as Square.
Yeah.
Yeah, we got similar products now.
I was gonna
It's
say,
coming out.
look for, even when you go to the bank, I mean, and guys, there's not a bank up here that I worked for a regional bank that was in 16 states. And they were kinda hard to get along with sometimes, I'll admit. There's not a bank on this panel that I wouldn't recommend to a friend that was starting a business or had a business in the startup phase. But, I've looked at some of First Bank stuff, I've not looked at First Community, but we all have access to the thing that plugs into the bottom of your phone that competes with Square. You know, we all have access to things that can make your life easier and speed up your cash flow. Even if you're a retail location and you cut hair and someone pays you by check, and most of us have the capability of where you can log on to your phone, take a picture of the front and back of the thing, and boom, it's at the bank that night, clearing the next day.
Can you use Apple Pay and different things with those devices?
We are in the process of linking with Apple Pay. I think First Bank's already linked with Apple Pay.
We're already linked as well.
You know, what I'm wondering though, like, I bank with First Bank.
Thank you.
Why, well,
Is she a paid
Not really.
advertiser?
no, they've been very, very nice. Why didn't someone tell us about that? You know, all we heard with other entrepreneurs has been Square, and so we're not heavily invested, but, you know, we've got 3 iPads and 3 Square stands. And it would have been nice if someone had said, you know, how are you going to, you know, to help us make a decision like that? We didn't have that guidance or.
The technology is changing so fast, is one reason, and it's changing, and lots of times the changes before anybody knows it, but I give bad excuses.
Oh, no, and you said you're more competitive, your rates are more competitive than Square in terms of the percentage that it takes out?
A lot of times.
Like, about how much, a percentage or?
It's,
Yeah, that's,
That whole pricing model, and I can say this because I know the banks in the process of evaluating our merchant services contracts. A lot of that is almost like credit-based decision. I think somebody asked about rate. There's a lot of things that go into that. It's how the company is structured. You know, if you're a sole proprietor, what's your personal credit background? So if someone has a more troubled past than someone that doesn't, you know, they might get a different pricing matrix come out. There is some industry risk depending. If you're in an industry that has a high level of fraud, sometimes your pricing might be more than if you're XYZ in the medical field and all you're doing is taking $20 copays.
Do you like give assistance, like, or is there something like that, if you were gonna change out my Square stand, I've got 3, I paid $100 each for them. You know, do you all have something like that? Do you assist your consumer,
We do.
in making the transition, like, you
Yeah.
know, we understand you paid that, but if you'll go with us?
All of us would be more than happy to assist and probably have people in the local market that actually come out to your place of business
Right.
and help you set up the new
Really?
equipment.
They do come.
Yeah, and most of us, I'll speak for all 3 of us, would be more than happy to, even if you had a Square statement, or if you had Highlands Union, I'll just pick on us, I don't want to pick on anybody else. If you had a Highlands Union Merchant Services and you went down to Gene at First Bank, you know, we all give kind of that free review like the insurance people. And quite honestly, the bankers don't like to talk about it, but it's kind of like insurance. That's something you need to shop at every 2 to 3 years. Pricing models change.
Do you have, like, 3-year contracts, or is a customer tied in to a certain period of time?
That's a good question. I think there is, on most of them, I could not pull it off the top of my head how long that is. What gets a little trickier in that is if you purchase your equipment outright versus leasing it. And most banks offer the two options, depending on which platform you want to go with, mobile or computer or desk-based or whatnot. There's a lot of parameters that go into it. What I would recommend is just contacting one of us. We'll get some people out, or contact all three of us and have us come out. And see what kind of fits your needs. I can't think of the last time that I saw something that had a real long contract, like 2 to 3 years.
Usually a year.
6 months to a year is kind of what I've seen, but I don't.
What's the average cost per month?
Based on based on volume, based on average ticket sales, things of that nature. I don't know that I'd have a good.
I mean, it's gonna be based on your usage.
We just, this past week, and, we didn't know when we first got it, the machine was paid for, but we knew the world pay at the moment, and didn't know what was gonna happen, not enough money going in there, we had a bill for like 119, and then it's down to 35 now, 100.
I will tell you that
35 is our basis.
with most of the merchant services providers, if you can get them to swipe their debit card, that is typically the cheapest.
I was just gonna ask you about that. All every credit card gets 50%. So these credit cards that have points and all sorts of benefits to the user are the ones that charge the merchant the most money. So, I mean, the
When I s-
businesses are paying for your airline points and your
Right.
money back points and all that. Now, are you allowed to, I mean, I guess you could say we only accept XYZ cards. I don't think you're allowed to say we only take more than $25.
I've heard that I've heard that argued on both sides on whether you can and can't, and I don't have the answer to that. I would have to defer to our merchant service
But I
lady.
would say that a PIN-based transaction is gonna be your cheaper transaction.
Right.
And
And it's significantly different than some of these had. You want to take your points first, and American Express sent us the whole thing. Just their users, you know, so.
I would tell, and that brings up another valid point is, in the years that I've helped clients with it, talked about it, a lot of people are like, oh, I don't want to take American Express because they charge this amount. Well, for most of us, it's easier if you go on the application and check the little box that, yes, you want to take American Express. Because inadvertently, what will happen, I guarantee you, you will get that large sale that comes in, and it'll be to my wife on a corporate account, and the only thing her company will allow her to charge on is an American Express. And then, you know, you're faced with, if you at least check the box, you're faced with the decision of saying, no, I don't want to do it, or, you know, whatnot, versus I can't do it. So, you may not make that your everyday advertised form of payment, but I know at least in the times that I've dealt with it, it doesn't cost you anything to check the box.
I'm gonna help him again, because when I had a gift shop, I had a huge corporate client that only used American Express, and they wanted to do all their birthday gift baskets for all their clients with my store, and we didn't take American Express, and I lost them in a week. In the week that I tried to get American Express, I lost that corporate client to somebody else, so he's absolutely right about that.
My wife caters a lot, and, you know, we like start a catering business or a restaurant or anything like that, and she's adamant about that. I mean, if she picks the phone, calls and orders, and they don't take her corporate American Express, but you'll get a quick dial tone coming through the other end of that line pretty quick. I mean, it's just because the amount of paperwork for her to deal with by paying on some other form of payment and getting audited and getting this and that is just not worth her energy.
And there's two different ways to handle that. You can either mark your product up 5%, because the most that you wind up paying through a bank is 5%. So you can either mark your product up 5%, or you can say, if you're paying with a credit card, there's a 5% convenience fee, and all you do is divide the total of what the charge is by 0.95, and you'll get your convenience fee.
Yes,
Yes, I
I tell you, I don't know the answer.
You
to that, but
absolutely
go-
can. You
go
absolutely
try to
can.
pay your taxes online
0.95.
and see what the county charges you, because they pass the fee on. Maybe they have an exemption that I don't know
If,
about.
if you're gonna,
But
you
that's a good
absolutely can charge a convenience fee. You have to tell them first. You can't just charge it and say, oh, yeah, your total's $100 and then their bill comes in at $105. But when they hand you their credit card, if you say, we charge a 5% convenience fee to run a credit card, then that is them saying, okay, take my credit card. But you absolutely can, and if the convenience fee is 6%, then you divide it by 0.94. It's just that,
And you do have to charge that to everybody, though.
Right.
You can't, like, discriminate.
It has to be a
You have to-
policy.
Yeah.
If I get charged that, I'm not going back.
Well, I'm just saying that if you don't generally take credit cards, but you're gonna take that American Express
4%.
because of that. I'm not saying you do it all the time, I'm just saying
Placard.
if you need that option.
I'd like to throw one thing out about, somebody walks up to your business and they see the Visa logo, or they see the MasterCard logo, or they see the Discover card logo. Those are just three, there's many more. If they don't see that, chances are they may not even come to your door, because it's such a electronic society that we live in. And so there is value in spending money. While we were talking about this, I just went to ask.com and asked a very simple question about merchant fees. It gave me three scenarios. On Payline data, for a $100 transaction, the fee would be at $2.14. On PayPal, it would be, I hate when that happens, it was $2.45. And on Square, it was $2.75. Not a whole lot of difference there, but when you
50
multiply
cents
it
on
times the
Square.
number of transactions, you can see that it can begin to add up. So there's value in everything that you do. And the thing about, I don't know anything about the merchant services other than when I was at True Point Bank, we outsourced through Avalon. That sounds very popular. But what they do is not only do they provide you with the service, but they're also able to print all those reports for you, So you don't have to go back and pull the shoebox out and start sorting all your stuff out so that you can see the HR block on 14th of April.
Will most of those that the bank's merchant services have the reporting?
Yes,
I'm just so excited. See, we've already
Can't
learned
go wrong
something.
with what you're looking for.
That's an industry standard. I mean, it may not be for Square, for PayPal, for those online whatnot processors, but just about every one that's linked up with a bank has got multiple layers of reporting capabilities. One thing I will tell you, and Gene, Mike, you guys can correct me, but I know one thing that's coming down the pipe, a lot of us have already seen it, it's called PCI compliance.
Performance.
Yeah, yeah, whoever worked in, yes. Every year, when you accept credit cards, you've got to go in and take this really boring online training class that probably eats up 30 minutes of your life, whatnot. You can probably do it on the couch, half asleep. And it basically goes into saying that you will be responsible for processing your customers' credit cards. You're going to do everything you can do to keep their information secure and, have the right data encryption and yada, yada, yada. If you don't take that on an annual basis, and you don't take it when you're required to, Visa, MasterCard, big guys in the world of that, charge you a PCI? PCI compliance fee.
$19.95.
Yeah, and it ranges from like $20 to $30 to $40 a month. So, right there, if you just put it on your calendar, most of it's web-based, go in under their little, they'll give you the username, password, go to the bank, they'll give it to you, they'll help you figure it out. Take 30 minutes of your life and take a class.
How do you know that you need it?
Well, honestly, usually we'll mail you a huge packet,
Okay.
and you look at it and don't even know what it is, and so a lot of people don't take it.
Yeah.
And they're charged that monthly fee, and they don't even know.
In our
why.
system, a lot of systems will email you, kind of like, hey, you're getting close to your due date, blah, blah, blah.
You're right, yeah,
I
and
mean-
most companies should, reputable companies should, like if you go through your bank, they should call you and remind you, not the bank, but the company, and the
Easy.
bank would as well.
Anything I've always told people to avoid bank fees, it's one of those, I gotta do it once a year thing. Pick a date that's important to you. I don't care if it's your birthday, your anniversary, your pet's birthday, whatever you want, and just do it every year. You know, I mean, make that your birthday tradition as you sit down with your favorite beverage and take your credit card processing compliance test.
My merchant service, they'll even, when first year I received it, I was like, what in the world is this? I just called them and they just connect me with them and we do it on the phone in like 10 minutes.
Yeah. Some of
I
them.
mean, it actually is almost comical now. You know what I mean? But I mean, we just got to play, and I call them again. Hey, set me up with them. They call, or hey, Paul, are you on the phone? I can hear my guy talking in the background while they answer these questions, and then it's done, and I can print my PCI compliance certificate that's hanging
Yeah,
in there.
it's one of those things, it's just a regulatory thing, you gotta do it, you don't let it slip away from you, at the end of the year, you've just wasted it.
So, let's get back around to, we've hammered all that out, let's get back around to, business, plan and financial projections. Do you all have any questions about your projections or, 1 year, 2 year, 3 year?
Kathy, have y'all talked to me, about credit reports?
Last night,
Okay.
we did.
Could you explain the basics of the cash projection?
Cash projection is, ultimately, it's a, if you remember the term profit loss statement, income statement, basically it talks about your revenues, your expenses, and then what that ends up being is income for you or a loss. What we want to see from projections is, project out, month by month for the first couple of years of what you see your revenues to be, what you see your expenses to be, what that income looks like. And then, you're gonna wanna have some dialogue around that for a conversation with your banker of why, why you think this is where your revenues are gonna fall, or why this is, what the expenses will be. Maybe, your business is seasonal and expenses go down in winter months or something, and, you've shown that on your cash projection. We may have a question of, why do your expenses go down very minimal in the winter? And so, we want to see those type trends and things that are going on with what you project your business to be doing. And that way we have a starting point.
Now, if you've been in business, some of you already have business, I understand. Then you got some historical data to back that pro forma of those projections up. And that's the best scenario you can have, is if you have the historical.
So basically, it's a guesstimate of what you anticipate.
Y'all have the historical documents. How do you justify your revenues if you're just starting? You're predicting that this is what you want. And today, we figured out how much I would make a day, and then compare that with my cash flow. Is that a good start in that process?
It is very hypothetical. I mean, even when you bring your business plan to us, you're already gonna have scrutinized it and customized it to the best of your ability. And we're not gonna have any magic potion when you bring it to us that says this is, unless it's just totally off base. It's all gonna depend on your strength in marketing and what the niche is and what the competition is and all that stuff. So it really is, it needs to be a conservative and realistic and tangible, something that makes sense. Not too much fluff. Because basically what we'll do, when I sit down and come up with cash flow projections, business ratios, global ratios, and that type of thing, I will err on the lower I throw one out there and I go before my panel of bankers, which is what I have to go through to get a loan approved, it's a certain amount more. If I've got a cash flow projection that's 14 to 1, they're gonna say, what? There is no way, you know. So, just, you know, like I said, we're not gonna have a magic potion that when you bring it to us, we'll say, no, this business is gonna earn you this, because we don't know how you're gonna market it. And I'm sure Natasha probably talked to you about all the social medias, and the Google workshop and all that stuff. All those are free things that can really, that Google thing fascinates me. How you build it to where when people type in a certain search word, yours is the first one that pops up because of how you created your Google website. So, you know, it's a good thing.
The biggest problem that we find with projections, pro formas, the biggest item is family living expenses. Because they vary so much from family to family. And it's hard to tell somebody how much they spend to live. They know themselves better, they should know themselves better, but there's such a big wide range from family to family, and I don't know if y'all find that. That's the biggest thing we have to deal with on a small business is family living. And do they live out of that business? We have some, you know, some businesses, families have to actually live out of that business and use some of the business assets for living. Agriculture is a great example of living on a farm. And you have to look at every business different.
So if you're not using this to support yourself, how would you want us to show that in our business plan? Just our taxes or our a budget of our personal living expenses?
Yeah, budget's fine if you can do a budget. To us, it's been always hard for anybody to sit down and do family living budget.
So I was gonna say, a lot of times we call, they call something similar, global cash flow. So in that situation, let's say, I'm starting a business and we go back to my machine shop and, you know, I've got projections on that and so on and so forth. And let's say my wife is still working where she works and that's gonna pay for the house, the kids, the cars and all that kind of good stuff. And then if I go to the bank, a lot of times we'll do a global cash flow. So not only will I have my packet of, here's my projections on my business and this is what I think it may make or lose or whatnot, but in addition, you know, here's our tax returns from last year, or here's my wife's pay stub, or here's my wife's check or whatnot, and this is what's gonna pay the family expenses that, you know, we're not, I think that's what Gene's trying to get to is, sometimes those are intermingled, and you can't separate the two, but then in some situations, if someone is still staying employed, part-time, full-time, whatnot, you know, you can use that as an offset to some expenses.
But there's such a wide range of family living expenses.
Yeah.
And it's the hardest thing. I think it's actually harder to pin down than the actual business itself.
In your case, I believe I understand that you have another job or some form of income that's gonna support you while you're doing this, and so you could, on your projection, you could have a personnel expense, maybe your only employee, I'm not sure. But, you know, base that and just, you know, explain it, you know, I'm taking this much money out of the company based on these revenues because, or for this, or maybe you're not taking any out, you're putting it back into the business. So I'd say, just whatever you put for that, just, you know, have an explanation for why that is.
And be careful about spending out of your business because you have to pay self-employment tax on that, and that's 15.3%. And the federal government there is no deductions off of that. People think they can, you know, put all these business deductions in some tax form, and that 15.3% does not go away. So if you pay yourself $100, you know, you're paying 15.3% no matter what. So just be very careful about, you know, spending out of the business and keeping up with it. Because it's one and the same, you know. And LLCs are generally, I don't want to get too far into tax stuff, but are generally taxed like sole proprietorship.
Yeah.
That brings up a good point that's always kind of stuck in my mind when I'm meeting with someone that's just started a business or thinking about, and everybody puts it off, and then definitely I'll get around to it, but one of the first things you need to think about, in my opinion, too, is not only your merchant services and things of that nature, something to make your life easier as an accounting software. Which one are you gonna go with? There's several industry leaders out there. How are you gonna access it? Mobile, computer, or whatnot? And I think the worst thing in the world for any of us is you have a small business walk in, they have a credit request or whatnot, and they open up a shoebox. And it's like, well, here's my receipts.
You need to go see People Incorporated.
See Wayne. So, you know, and it's just, it's like I said, it's whatever to make your life easier. So the quicker you start that, the quicker that you pick one of those softwares and get familiar with it. And there's, you all might even have classes on it, don't you? You all have one? Okay. Yeah, you gotta take a class on it.
And the sooner you can pick that too, they can help you with your projections. I mean,
Yeah.
it's a really good system to do projections in.
You're talking about building, somebody was talking about building your revenues and, you know, the P&Ls, the balance sheets, the income statements. If you have the software, you can plug the data in and it'll actually spit out a paper on the backside that we're familiar with rather than just a shoebox of receipts.
Did they talk about software from the CPAs review?
I don't know. I don't think they really got around to asking that question. Did they talk to you all about?
QuickBooks or something?
Yeah, I think, Mike, I think mentioned about, QuickBooks.
I have a question. I don't know if it's for you guys or for you girls at the chamber. Okay, so like if this is a startup business and one of the requirements is a full-time position and then trying to get the money.
You are the full-time position.
Yeah, if I were the full-time position, which means that I can't leave my full-time position to take the full-time position in order to get the money. Does this make sense?
It does, but yes. And the answer is, if you are not, it does make sense. The answer is, if you are not the full-time position, you have to create a full-time position.
But I don't understand how we could, have a full-time position to maintain the relationship with the bank and want to be the full-time employee, because that's conflicting to me, and I don't know if I'm just not getting it.
So are you saying leaving a income producing job to run your
Correct.
business, you're having to forfeit the guaranteed income?
Correct, to
For
take a risk.
hypothetical projected income that may or may not exist for 3 months or 3 years. That's what you're asking about?
Right.
Okay, and that's where the mitigation comes in, that's where the skin in the game comes in. You've got this much invested in it, you've already, you've studied the vocation, that's where the mitigating factors come in. If we see that Katie has substantial collateral to mitigate the risk that we're concerned about, if you're willing to pledge that, well, then that will offset the hypothetical side of, or maybe on your application, there is reason to believe that there is outside influence, whether it's family investors or whatever, that are backing you on this.
Okay, and what if you don't have any of that?
Well, then there's
What if you're a teacher,
what
you
your
ain't got
personal
crap?
contribution to the application would be.
But I think she's asking about the rules of the contest.
Also,
The rules of the contest are, yeah.
No idea.
So you either have to create 2 part-time or 1 full-time position. And if you decide that you're gonna start a business, I'm not too sure, like you're saying that you're gonna work full-time and then you're gonna work on your business, your startup
I'm
after
looking to leave
that.
the full-time job I had to do this.
Yes.
Because I feel very passionately about it. But I don't wanna not have their support.
Well, they're not judging the,
Well, I know, but like if I needed money for the business and like if you don't have a lot of collateral and you are relying upon your income to make them happy with giving you a loan or whatever that you might need for your business for supplies or equipment or whatever, So then do you work your full-time job and then hire somebody to work that part-time and then you come in the evenings to do the other part-time, or, I mean,
That would be one way.
am I not making any, am I?
I see what you're saying, but let's talk about that afterwards. Let's not get off point on the finance part of this. You're saying that you want to leave your job, but when you first start your business, you don't think you'll be able to. However, you also don't think you're gonna be able to hire anybody.
Well, I'm saying that I probably need some backing, but I don't have a lot of collateral. So I probably need my income to satisfy their trust in me to be able to make these payments for a loan that I might ask them for.
But you are still a startup business.
Correct.
And so you would be, the rules have always been that startup business, the person who is starting the business is the employee. So you would still be the employee. So what that says is you're actually gonna be working 2 jobs.
And I don't think that would be uncommon for a lot of startups.
That's not uncommon. No, I don't
It's
think
almost
there's a
typical.
problem, so, yeah.
We won't tell anybody.
Sorry.
You know, you'll be exhausted and it'd be, you know, you'll have
Yeah,
your own business.
All startup businesses, the person that is starting it is considered the employee.
Do you guys require us to show, you know, a full-time employee is 38 hours a week? Us to show you where we're putting those 38 hours a week at? You know, like 3 days a week?
Well, you're an expanding business, so,
Yes.
so you're gonna have to, as an expanding business, you show the social security number whited out of the employee, the W-9 form that you turn into the IRS for that employee. So it has that employee's name, address, you know, whatever it is, whatever other information is on that, where they have signed to say they are your employee. We don't want to see their social security number. So you just wipe that out.
So it's just hours. It doesn't matter which hours, but just hours.
For startups and existing and expanding are 2 separate set of rules. Startups, the startup is considered the employee.
Correct.
Expanding has to show W-9
New
forms
A new
with
job.
the employee's signature.
Okay, so the startup does not need the W-9?
No.
Okay, thank you.
Let me tell you, when I was going to, we're gonna open the business, the first part when I was talking about, I did the business plan. I went to Tom and he kept telling me everything I was projecting was just because that's my fantasy of projecting what I thought was gonna happen. Even though I knew it probably was gonna happen, he kept saying, and so how do you know this is gonna happen? And so you gotta show me that you know, where I needed the money to back it, I needed to show him more than I was just a fantasy. So that was the hardest thing.
You know, we had a presentation again in New Knowledge. I always like to plug New Knowledge, but we had a presentation and you know, we talked about revenues and expense projections. Now, this is my humble opinion only, but I would always under project revenues unless I were looking for some big loan, and I would over project expenses so that I wouldn't be surprised at the end of
Well, I had a big dream at that moment too, so.
Right.
I came off of that. But, I thought, I really think I could have done that, but not all by myself, so that was the whole thing.
Yeah.
Carl, do you have-
Yeah, I was gonna say, you know, those of you having trouble figuring your projections, how to calculate it, you go to score, SCORE.org, O-R-G, it's right there, you can plug and play.
Score.org. Write that down.
Score.org. Now figure your projections, everything by putting your startup numbers in.
Score.
.org,
And you know, if your bankers here can tell,
You have to pull it, I can show you.
your,
It's in the
your bankers
finance.
here can tell you what they're looking for in loans. But generally, I think they'll all tell you that startup businesses, a lot of them are referred to agencies like People Inc. Am I correct? Startups are People Inc. projects, generally.
I would say most often, they are, I mean, in her situation there, you know, you're working on another job and supporting this startup, so those are type businesses that the bank can get comfortable with, because we have that fallback, income that's gonna take care, provide your living expenses, provide, the cash to pay the loan, for the business if the business didn't make any money. So, those are type scenarios. Now, a true startup that, and you know, these guys can speak for themselves, a true startup is tough a lot of times, as there sometimes isn't any collateral, sometimes isn't any, or there definitely isn't any cash flow except for what you're projecting. So, so we're gonna look at, you have a nest egg or, you know, some big savings account that can help support that. You know, we wanna try to do that, but many times we do refer those to Wayne.
Going back to Tina, where she bought an existing business, if I was doing projections for an existing business, I would ask for their records. So, you know, I'd want those records anyway if I was buying a business.
And I had it last week about it.
Yeah, and you could use those records for your projections, and you can tweak them, you know, according to what you think it's gonna do, but you have some base to go by.
Yeah, if you're looking at buying a business, always ask for the past 3 years of the historical salt. And if they can lose some money, and you think you can turn it?
Your bankers will ask for those records.
Yeah, and if they see it's losing money, forget it. You know, so understand that. You know, you want companies that are growing. You don't want companies that are losing money.
I've got an expanding business and we've had small checks go into the checking account. When we get rolling and really going well, if I bring in a large check, say $1,500, which is not normal for my business account, is the bank gonna say, we need to put a hold on that? Are they gonna hurt my cash flow?
Depends on the institution, depends on your relationship with that institution, and how the account has been conducted historically. So, and
Might be on the check too, that you're.
it could be on the check.
If
where
the
it's
check's
from.
out, you know, some checks from California, checks from somebody that we don't know, could be.
You know, I work on the consumer side, on the quote unquote branch side more than the guys here. And maybe you've been a Highlands Union, First Bank Trust, whatnot customer for many, many years on a personal level, and now you're in a business venture. And you have an item come in that's out of your normal. You know, they may not put an extended hold on that just based on the relationship that you have. Here again, it goes almost back to the merchant thing. The more products and services you have with one institution, the more relationship you have with them, the more you get to know them, the more they know about you and your business, the more comfortable they can make on making an exception for you. So, you know, if you have an average balance of $500 in a checking account, and you walk in with a $10,000 check drawn upon a bank in Kansas, probably gonna take it a little while. You know, if you walk in with a $1,500 check and you're depositing it at Highlands Union and it's all First Bank and Trust, there's probably a lot of people in this room that would be comfortable with that. If they know you and you have a track record.
It's just that whole cash flow.
Oh, sure.
In and out thing, yeah.
So yeah, it's very situational.
And I understand that totally, it's just that, you know,
But
I
I
have
will,
to make sure I always have backup.
I will
if
say,
it's on hold.
going back to my previous life, which was with a large institution that was pretty rigid, some of the larger institutions, Bank of Americans, you guys call them, they didn't have any flexibility. It was, the computer said this, we're doing this, that's the way we're doing. And I'm not picking on them because I was from an institution that had a similar mindset.
Now, we can kick off.
Yeah.
Yeah.
There's
They decide they don't want to be here.
And my new CEO would be, believe it if I said this, and there's not an institution up here that I would recommend and still has a human touch to it.
It means a lot. It means a lot in small business. Hey, just to tell you all, I've just scrolled through this score.org. Man, It's got business plan templates, it's got financial guide templates, it's got everything that you need. And it even has a startup business template and an expanding business template. So. Okay, so back to financial projections, back to your business plan, back to questions of your bankers. Do you have more questions or comments or?
I had a, oh, go ahead.
Before I started my business plan, I decided not to borrow money. I hope I don't have to, but because of that, and after I've done my business, we've done our financials, almost completed them, I still feel comfortable with not having to borrow money. So percentage-wise, as the banker, you know, am I going to make it okay? I mean, am I delusional in thinking that I won't have to? Or is it something that I can base maybe future bank relationships if I can show that I did this with no money?
That'd be positive for me. The only thing is you need to make sure you have working capital. Don't get in the bind. Put your lady behind you to talk about cash flow. Don't put yourself in the bind where you don't have working capital to keep it going. I mean, even if you can get, if you don't think you need the money, but there might be a case down the road where you can get a line of credit and only use that line when it's needed.
Credit card.
Got a card and service line of credit, but I would be more comfortable with the local bank than.
If I expand like I hope to, I would need lots of capital because I want to really grow. But starting out, I would like to, I guess, establish a credibility in the community where I'm a stakeholder and I really believe in what I'm doing, because right now there is no direct competition in what I'm doing. It's a service. And so I'm hoping that the community will see that as a, you know, I don't know, star in the crown or whatever, something that they'll be proud of to, you know, to, I guess, have a relationship with in many different ways. But that's my goal, is to not be, you know, a debtor starting out, but be, you know.
I would say that increases your chances of success just because you're not burdened with that debt service. You know, you're not burdened to that expense. I would, just off my experience, I think the ones that you see maybe have a higher failure rate are the people that want to walk in and borrow, you know, 95% of what it's going to take to start a business. Not probably that we could get real comfortable with that, maybe Wayne could, but, you know, those, you know, I mean, and it's not because they don't have good intentions, it's not because they haven't, you know, thought it out. I'm saying it's just that they hit a bump in the road and they get strapped with a large expense, and then where do you go? So, you know, that's a shining point for that I would think. You know, I think one thing that Gene's kind of saying is, and I've seen it happen in the past, is whether you started it all with cash or whatnot, people go down the road, no, I'm never going to borrow, I don't need to borrow, I'm just not going to borrow at all. Well, then when the day comes that you do need to borrow, unfortunately, if you don't have it set up a little bit in advance, sometimes you don't qualify, right? I mean, because.
So going through the process, even though in a loan would be a good idea for future forecasts or future.
Well, the good thing about a line of credit is it's usually there for a period of time, whether it's a home equity line of credit, or a business line of credit that's secured. You know, the thing about it is, it's just that. It's not a debt until you use it. But it's just like Burt said, you're better off now that you have the resources and you're in a good financial standing to go before someone and say, you know, this is what I'm thinking. I don't want to find myself in a situation, so I would like to go ahead and get this just in case, as opposed to coming in and saying, all this is due right now. I don't have the income to do it. All of a sudden, all these red flags start going up, you know? So I think you're the best judge of whether or not you need it. You know how well your business is doing and how you're marketing. But I would encourage everybody to have some something to fall back on, that they don't have to panic to get to.
There's a lot of unforeseen things, when those things happen, and you need the money, you need the money yesterday. And, you're looking at it down the road before you get the money. You're set up to get it, it makes a lot of sense.
That's why I'm glad we didn't do that first, because now, if I make it,
And don't borrow against your merchant service account. They will. I don't know that our company's specific to you, but if you're with a brand X at a larger place, some of them will allow you to borrow off your merchant service account, borrow off of future sales. That is.
Not good.
And they'll sell it to you, and they'll say, we'll put $1,500 in your account tomorrow, blah, 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 that. I've never seen that work out well.
As we talk about lines of credit, one thing you see young businesses, startup businesses, is a line of credit, make sure you always remember this, is for short-term working capital. It's used to buy inventory, to buy raw material, whatever your business is, to buy upfront cost to a service you provide. And then when you provide that service or sell that product and you get paid, pay that line of credit down. Don't make that line of credit become permanent working capital. And then it becomes a term loan. Then you've got you've got a loan that's gonna come off there and you still need a line of credit. So now you've got two debts. So just be sure that you use a line of credit correctly and let it be maintained as a short-term need.
Oh, one question I got asked is, what do you think a typical size business plan is?
The number of pages.
You know, I'll be honest with you, I'm a simple kind of person. Depending on the complexity of the business, naturally, there's some business plans that can't be conducted in four pages. 4 to 6 pages of the, executive summary and the marketing strategy and, blah, 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 the competition and all that. 4 to 6 pages should be sufficient, and that's not in a microscopic font. As far as projections, just the real girth of what you think the business is going to do, supported with statistical data that you come up with. It's through SCORE. You mentioned SCORE.org, and I think that's going to be a huge asset for all of you, but it's probably not going to have the specific demographics that you need, that you would get from Sue and Tom and Margie and all those. So it's going to be a great starting point, but then you can fine tune it by going to them. So with your projections, as you outline what your expenses are going to be, telecommunications, insurance, blah, 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 just make sure that you include all those things. I actually got one business plan in that showed that the projections were this and the expenses were this, and there was no breakdown of how they came. And I was like, well, that's simple, but I don't think I can show that to my banker friends and let them approve. So too much information. Yeah. Yeah.
If you can write on those little bars.
Yeah, that's right. If you write on the little lines, for sure.
I probably missed this answer to this question, but does People Incorporated have a bridge loan or a kind of a loan guarantee program?
A loan guarantee program?
Either. Bridge loans or loan guarantee programs.
Bridge. Well, bridge, I mean, if it's the right thing, if it's just gonna bridge a gap or, we'll consider doing that. We'll advertise it for a certain amount of time, just to make sure that if the bridge falls down, there's a way to get across the water until you can build the next bridge, But that's the thing about what we can do, is we can kind of customize that loan. For instance, if you're in a business and you're in tourism and you do kayak tours or whatever, you're not gonna do that during the winter months. And so we can actually do a seasonal loan where you have 9 payments and then you have 3 months where you don't make any payments. So we try to be as creative as we can, Kathy, with any request that we get. We just have to keep our sources happy, U.S. Treasury and the SBA, and lend it according to their standards, but we're pretty flexible.
Any other questions?
Kathy, there are a lot of guarantee programs out there that my bank utilizes and these guys utilize too. Especially for somebody with, say, specialized assets, that you would need, something that would be hard to sell down the road that you can get a guarantee. And we got guarantees up to 95% of getting lost in some of our deals. We, SBA, rural development, we use, FSA for our ag loans. But there is some for limited resource type deals,
And so,
special assets.
and so loan officers in all of your banks are aware of all those types of,
And we might have somebody that, in our bank that might specialize and just do those, for our bank, cause a lot of these government programs are very,
right.
I mean,
So does everybody understand what we're talking about here? And the only reason I thought to ask is that I counseled with a brewery one time, and they got a loan guarantee program through the SBA because of the type of equipment that they were gonna have now. They thought they were just gonna get that money in their checking account, and then they were gonna buy the equipment and do all that stuff. That is not the way those things work. That money goes straight from the bank to the equipment company, or, you know, I mean, they have some stopgap measures on those, but they're excellent for, you know, for those types of,
so we,
business
you know,
potential.
on some of those assets, just, so we can protect your lien, we would do a direct check to whoever they're buying to.
right.
But, those are good programs, and we utilize them, a whole lot. And what happens is the bank makes the loan, and we work with what program it is to get a guarantee on that loan. And if we ever have to, liquidate that loan, then they pay us a percentage of that loss that we would ever lose on that loan.
Right. Because, you know, I mean, let's face it, if you repossess a brewing tub, who you gonna sell it to?
Probably a lot of people.
Well, moonshine still. But that's something that, you know, a lot of meetings we go to, we hear about angel investors and this and that. Those types of, you know, grants and angel investors, those types of things have kind of dried up. Angel investors are for for businesses that have either a huge potential to succeed or a huge potential to fail. And so, you know, those aren't generally what you talk about in a business plan challenge. Right. Okay, anybody have any more questions? Going once, going twice? I have, you all asked some questions last night, and I happen to have gotten an email today from the IRS. You all were asking questions about health care and tax credits and all that. And lo and behold, in my inbox was the answer. So I made copies, and I'll pass them out. Let's give our panelists a round of applause. And thank you all for coming. We really appreciate it. You're excused.
Next week, we will be taking, everybody pick a number, and whatever number you get will be.
And can you say again how long is the pitch?
8 minutes.
8 minutes.
7 minutes, I'll be raising the thing up. At 8 minutes, we got this big cook, and we actually pull from